morning. Welcome to the XM.com weekly market update, and we're joined again by Peter McGuire, the CEO of XM. Good morning, Pete.
Good morning, Andrew.
Once again, we'll get into the data. Plenty happening as per usual. Big day in the Aussie market. The Reserve Bank meets later this afternoon.
Absolutely.
The anticipation is another 25 point rise in interest rates, which is pretty much fully priced in.
Yep, it's baked in.
But there's a lot of discussion domestically about the RBA and their rate rises and the impact that they're having on consumers.
And are they going to say sit on their hands? And there's an equal amount of probably analysts or Main Street saying they should sit on their hands, and there's another part of this whole equation of saying, well, let's get the hurt done as quick as possible and let's get it up 50 basis points. So and that's the beauty of trading currencies, because the byproduct is what happens to the Aussie dollar.
That's right. And I think there's a school of thought as well, is that it takes quite a while for these interest rate rises to really filter through the whole economy.
Yes.
So that school of thought is raise and then hold for a period of time, which could be 3 months,
to
see the real impact. But
absolutely.
But then again, this would be the 10th consecutive rise.
Yeah.
So it's pretty clear what the RBA is trying to do.
Yeah. If you haven't picked it up already, we understand what the 10th will be.
It is. CPI came out as well, dropped off a little bit, which once again is good news for the RBA. They will obviously want that to fall considerably.
Yeah.
I suspect it's going to be quite some time before they get back to that 2 to 3% band,
Absolutely.
that target band. But as long as it is coming down, obviously that would be their preference.
A good sign. But that also, we saw cheaper energy prices in February. We've had a bit of a move up in the last matter of probably 3 sessions. But the last 3 reads 6-1, 7-4, 7-8, 7-4. So it nearly sounds like a tennis match, doesn't it? So we're back at 7.4%. Let's see where it rolls. And one would hope that we see some respite and pullback, but hey, it's only early days.
Yeah, but you were seeing quite a contraction in the housing market. The retail sales are off. So you would think at some point those factors would feed into a potentially slightly lower CPI number, but time will tell.
Yeah.
Up in Japan, plenty of activity. We've got the new governor coming in April, I believe. Interesting there where the numbers are creeping up, where the obviously CPI and the cash earnings and the real wage growth obviously in positive territory now, which is interesting looking at that chart, particularly for Japan.
Strong wage growth in January. It outpaced inflation. I just read that only in the last 48 hours. And the other side, of course, is Governor Ueda. He's really going to come out of the blocks, I would say, with possibly a rate rise, which will shock the world. But what also happens as far as the yen, it's been all over the shop since October. It's been incredible market to trade, and I'm really expecting some fireworks out of the yen over the next quarter moving forward, April, May, June.
Yeah, well, speaking of the yen, sort of there's the chart there. It's hovering around that 136 mark.
Yep.
We've seen in the last couple of weeks the US yields have gone up slightly, which obviously has an impact on the yen directly.
Yeah, exactly right. With the Treasury and the 10-year, as it says there, it's through 4. And are we going to see what we saw going back a little while back, and 4.5? So there's many of those Fed on the board of the Fed. They're saying 6% is going to be the number, and we'll just have to wait and see how all that works, because we've got Bank of Canada this week, we've got the RBA today, we've got the non-farm payrolls on Friday out of the States. Yes. I want to see the employment numbers and how they're looking, as far as, February's a different month to January or December.
Yeah, certainly is. Still in Japan, interesting chart here. Looks at the births and the deaths. Now, it's been a situation in Japan for quite some time now about the ageing population.
Very much so.
But when you see it on a chart like that, where the birth rate is continually falling, and obviously because of the ageing population, more people pass away.
Yes.
Last year, close to 800,000, difference in more
births
deaths.
to deaths.
More deaths than births. Yeah, so.
Yes.
And that will, you would think, only continue. So it may not be a huge issue today, but you look at
in years to come. This is the great challenge that China faces as well, with a one-child policy and an ageing population, and the differential between the second largest demographic in the world, or population base, is India, where it's an incredibly young population.
Yes. That's a big difference.
A huge difference.
Yeah. And
when you see them in like you compare them, you know, I go to Tokyo and I see a lot of older people. I'm not putting myself or you in that category, Andrew, but you see older people. You see 70 and 80-year-old women riding push bikes on the footpath in Tokyo. It's not unusual, and a lot of old people. Same in China, I see a lot of older people. But when I go to India, there are that many kids and under 30, it's just incredible.
Yeah, no, they certainly are, and very well educated, a lot of them as well. So.
Yes.
Interesting chart as well. The FTSE last year clearly outperformed both the Nasdaq and the S&P. And if you look at the situation in the UK last year, with all the dramas with the economy,
It was a shipwreck.
and on the political front, yet the FTSE stood up,
grinded higher, and it was a very strong. When you're looking at that, it really came out of the blocks quite nicely in October, November, and it rallied nicely to the upside. So yeah, it's had not a bad recovery or a bad year when you're looking at that, 13-month window.
Yeah, it's an interesting chart. So over to the Eurozone, once again, a little bit of positivity coming out there with the GDP slightly higher and that composite PMI back in sort of expansionary mode, albeit very slightly. Yeah,
exactly. We've got what they do as far as rates in the Eurozone, how that's all playing with GDP and, the situation with Germany. We'll just have to wait and see again this month how all of those factors come into play in the decision making of the ECB.
Yeah, and on the rates, once again, sitting around that 3% mark at the moment on the Eurozone, the expectation is another probably a 50 basis point rise at the next meeting.
So. Yeah, very much so. I think it's baked in, unless they go even more aggressively, because they're going to play catch up. And as they're saying there, investors are pricing in 155 basis points worth of additional rate hikes. Yeah. You just see what happens as far as the inflation read.
For sure. Finally, just in the US, we had the ISM manufacturing numbers out last week. Once again, anything below 50 there is a contractionary number. So it came in around that 47 mark, which this one's measuring factory output, which is starting to abate, which typically is telling us the consumers aren't buying or spending as much.
Exactly. And that tells a story. So we've just got to see, again, what impact that has to US dollar, Fed policy, and Mr. Powell.
Yeah, and once again, obviously we'll probably get higher interest rates there, but some big numbers at the end of the week, as you mentioned earlier, the non-farm payrolls, which we had a huge uptick last month.
Yep.
So it'll be interesting to see how that falls on Friday.
Of course, we've had a pretty good move to the upside as far as US equities in the last few sessions. I want to see what happens with China and their policy. They revised everything down to 5% from 5.5. I don't think it's not a great deal. So it's Asia was relatively strong yesterday. I think that momentum might continue this week. Let's just see how it all rolls.
Yeah. So I think the US equity market is interesting at the moment, where you do get a few sell-offs every now and then, but it's just, I don't think it's, well, not yet anyway, it's not falling away anywhere near as much as what people probably would have considered maybe 2 or 3 months ago.
That's right.
It's sort of proving to be fairly resilient at the moment. So once again, a lot of it is data driven.
Oh, 100%.
But I suspect if we start getting some, which is ironic, negative numbers, which will be positive for the equity markets, I suspect we'll see a fair bit of cash flowing back in.
Well, it's going to be an interesting time, and hold on to your hats.
Yeah, it certainly is. All right, well, thanks for joining us again.
Lovely to be here. Thank you.
Thanks, mate. And that's the XM.com weekly market update.